Good morning students, welcome to online classes. Dear students, in today's class we are going to discuss one more very important topic in unit number 5th, that is estimation of working capital requirement, and also another topic, that is operating cycle of working capital and operating cycle of non-manufacturing or marketing concern. Apart from this, again more important topic, needs and importance of working capital is there. That is not much for important for the practical oriented. So at the time of giving notes, I will give those things also. Before going to discuss estimation of working capital, in the previous class we studied introduction of working capital, meaning, definition, concept of working capital. Okay, and again objectives and classifications, those things we discussed in the previous class. Let us start in today class operating cycle of working capital. It's very simple. In operating it is refers to the length of time required to complete the series of events such as cash into goods into accounts receivable, and to cash of enterprises. So this process is what a operating cycle of working capital. So let us we move to understanding in detail with diagrammatically. See, operating cycle, first we are going to investing the cash. So cash converted into what a raw material, means whatever we have cash, so that cash we are giving and purchase the raw material. So once we purchase the raw material, so that whatever the raw material we are used into what a work purpose, that is work in progress. So once work in progress is completed, then again is what a finished goods. Okay, so once is finished goods is finished, so then we will move to the sales. So once we say, once we are ready to sales, either sales is debit or DR or BR, means it in the sense of debtor receivable or in the sense of bills receivable. So once we done it, again converted into whatever the DR and BR is converted into cash. So this is a process of operating cycle of a working capital. Very important, working capital is nothing but current assets minus current liability. So this concept you should be keep in your mind, then you will be understood the concept of working capital. I think is clear about by diagrammatically. We'll move to the next one more important, that is operating cycle of non-manufacturing. So what happened in this case? Seen that directly cash into stock of finished goods, means non-manufacturing means what? So these are persons, or these are the activities are not involved in the water production activities. So if they are not involved in the production activities, so those are also using the working capital concept. So for that only we are going to calling operating cycle of non-manufacturing. If there comes under the manufacturing, they are using raw material and work in progress. If they are not if they are non-manufacturing, directly cash is converted into what? Stock of finished goods, and those they are ready to sell. And once we are selling, that is sundry debtors and bills receivable, then that sundry debtors and bills receivable converted into what? Cash. We'll move to the next one more topic, that is estimation of working capital requirement. See, the estimation of working capital requirement is not an easy task, because failure in this task leads to either excess or shortage of working capital. Both the positions are dangerous. Working capital represents excess of current assets over the current liabilities. It means, as we told in the previous class only, working capital is equal to current assets. Current assets exceeds the current liabilities. So this is called as what? Working capital. And following the factors to be very important at the time of calculation. Again, I will tell you this is most important. At the time of calculation of working capital, the following the points is to be considered factors. The first one, expenses on raw material, labor and overhead, length of time, the raw material to be held in stock, length of time of raw material remains in the manufacturing process, so etc. These are very important. Seventh one also, uh, time gap in the payment of wages, salaries and other operating expenses, etc. In simple word, the following the factors are very important at the time of calculation of working capital. We will move to the next, that is this is a pro forma to calculation of working capital. See, this is a pro forma is what I have a little bit one or two items, but whenever we are going to calculating the working capital, most important you have to read the problem and understood the concept. Basically it is current assets or current liabilities. If it is current assets, then it goes to under the head of current assets. If the adjustment is relating to the current liabilities, then it goes to for a current liabilities. Apart from again basic is what most important, you should know about what is current asset, and you should be know about what is current liabilities, how it will be occurrence being a current liabilities, and how it will be a current assets. So if you know the basics of current assets and current liabilities, there is no difficult to work out or solve the problems under the working capital. So first we have to take it a current assets. What will be the current assets? For example, cost of raw material to be held in stock. Yes, whatever the raw material we are going to, once we are going to purchase the raw material, so our cash is going to block under the current assets. Sorry, our cash is going to block under the raw material. So once is going to block, then it is to be what? This is also comes under the current assets. Second one, work in progress. It means whatever we are investing the cash in raw material, then raw material is moving towards the next step is what? A work in progress. So in that also our cash is to be held. If cash is to be held, then is again as cash. Sorry, it is again asset. In which type of asset is a current assets. Next, third one, cost of finished goods. This is also one type of current assets. And sundry debtors. Debtors is also, you know about it. Debtor is also one of the current assets. You already studied in PUC second year in ratios also. Current assets, quick ratios, current ratios. Is it right or not? So in that, current assets means what? I think you will be clear about. So these are the types under the again bills, receivable. Okay, this is also one of the current assets. Next, we will move to the current liabilities. So what will be the current liabilities? Creditors. Okay, any payments, and if there is any bank balances to be maintained, so this all will be comes under the what? Current liabilities. So total of current assets minus total of current liabilities, we will get it a working capital required. Okay, once again I will repeat you, the performa is only, it is for only our only it is a understandable purpose. But in problems, when we are going to working the problems, in each and every problem, the adjustments are to be different. So based on the adjustment, you should be understood, it will become a current asset or it will become a current liabilities. Current asset means what? Which is easily converted into cash. That is what a current assets. Current liabilities means which easily payable within a 1 year. If you have any liabilities, such liabilities payable within a 1 year, those all are called as a current liabilities. Okay, thank you. We will meet in the next class.